I'm Jim Smith.
And I'm Martin Fox. Welcome to our second investment update for 2024. Jim, take us through the headlines.
Thank you, Martin. For the 3 months ending 30th of June 2024, we've seen continued gains in US shares, but other markets have been more subdued. US chip manufacturer Nvidia rose sharply and briefly became the world's most valuable company with a market capitalization of more than $3 trillion. Here in New Zealand, the local economy continues to struggle, with pain being felt by many consumers and businesses alike. If we take a quick look now at inflation and interest rates, we can see that the New Zealand official cash rate, or OCR, has remained at 5.5% for the last 12 months. Those higher mortgage rates for individuals and borrowing costs for businesses are really starting to bear down on the economy and causing growth to stall. But there is some light at the end of the tunnel. Inflation continues to come down and fell from 4.7% to 4% in the last quarter. But whilst that is good news, inflation is still 2% higher than the Reserve Bank's target. So we may have to wait until late this year or early next year before we see any cuts in interest rates.
Looking now at market returns. For the past 12 months to the end of June 2024, global share markets performed strongly. In New Zealand dollar terms, the S&P 500 index, which represents the 500 largest companies in the US, was up over 25%. Australian shares also had a good year and were up around 13%. The MSCI World ex-US Index, which is a broader measure of stock market performance of companies outside the US, rose 12.5%. However, here in New Zealand, the stock market actually fell with a return of negative 0.8%. New Zealand bonds were positive, returning 6.3% over the past year. If we now look at the last 3 years to the end of June 2024, we can see it's a similar picture. The US performed strongly with a return of over 15%. Global share markets outside of the US made reasonable gains, whereas New Zealand shares were down 1.7% per annum. But if we take a 10-year view, we can see New Zealand shares doing much better. The US still leads the pack with a gain of 17% per annum, but the New Zealand market gained 9.7% per annum, beating both the Australian market, which gained 8.2% per annum, and other global share markets outside of the US, which gained 7.7% per annum.
As we've just seen, the US market has been very strong these last 10 years, and US companies in particular have come to dominate the market. You can see from this table that at the start of July 2024, 8 out of 10 of the most valuable companies in the world were from the US, with only 2 companies, oil company Saudi Aramco from Saudi Arabia and semiconductor manufacturer TSMC from Taiwan, making the top 10. The US also had 3 companies worth more than $3 trillion. To put that in perspective, the total value of all listed New Zealand companies is only around $100 billion. So any one of the top 3 US companies is worth more than 30 times the entire size of the New Zealand share market.
With an economic backdrop that seems slow but stable and some markets doing better than others, what are the key takeaways for investors?
Well, quarterly portfolio returns are always noisy, often with gains in one quarter being followed by losses in the next. If you only focus on just the last quarter, you may come away feeling disappointed. The trick to having a successful investment outcome is to focus on the long term and not get blown off course by the noisy short-term performance.
While some markets like the US have done better than others, markets are very competitive, and we shouldn't always assume that history will repeat itself. It is therefore important to select a well-diversified portfolio holding many different investments across different economies, regions, and asset classes.
Investors should also review their situation at least annually, so together with your advisor, we can make any necessary changes to your investment as your situation evolves to keep you on target to achieving your objectives.
Thank you for listening. As always, if you have any questions, please reach out to your advisor or a member of the team. We will be happy to help.